Good evening, friends. Myself, Viral Mehta, and today we have along with us Vinita Sharma. She is Head of Research for Narnolia. We also have Shailendra ji, who is CIO and co-founder at Narnolia. So they will be helping us to understand about the markets at current scenario as well as post updations of the market. They will also help us in understanding the Narnolia portfolios, which we are currently running on the our small case platform. In case any participant has any questions pertaining to the macroeconomy, microeconomy, or any kind of a industry or segment specific information or questions you have, please write your questions in the Q&A box. We will take your questions post the market hours, post our webinar. Apart from this, we should restrict ourselves from not asking any kind of a stock specific information. So this will help us to cater more and more questions. Thank you, friends. Shailendra ji, now you can have your presentation and have your words accordingly.
Sure, Viral. Thanks a lot. It's my pleasure to be on the platform of IIFL. So, very good afternoon, friends. All of you who are there on the call. It's absolutely a pleasure for me to be here with you. And what I'll do basically is I'll share some of my market thoughts. I know market has been very volatile in a way. I mean, we had a huge rally all through, starting April 2020, we had a one-way rally till October 2021. And then a kind of a decline, almost 18% fall if you take Nifty. Thankfully, from middle of last month, that is June, I mean 17th, 18th, we made a low on Nifty. 15,000 kind of a level, and from there there had been a sharp bounce back in our Nifty. I know for sure, including most of us are a little confused because of the kind of volatility we have seen, right? And a lot of worries are floating around. I mean, we are talking about higher inflation in the world. A lot of geopolitical things has happened in the past, and still a lot of news flow keeps coming around that. World over, the central bankers are raising rate, including RBI, US Fed, you already have seen. In a situation like that, in a macro backdrop like that, I know for sure as an equity investor, because we all know equity is an asset class, which is like any kind of a negative development on inflation, interest rate, geopolitics, it gets impacted, right? So for us who are into equity investments, it's pretty natural for us to feel little, such kind of a volatile atmosphere around surely makes a little doubtful, right? But I think the way I am looking at the market right now, the way I'm looking at the global macro also, specifically Indian macro, looking at the structure of Indian market, I do not have any doubt in my mind that there clearly is a very good investment opportunity for all us Indian, Buying Indian equity for the next 3-5 years will yield us very good kind of a return to our portfolio. But yes, through my conversation initially, I'll first talk about those doubts that you have in terms of inflation, interest rate, etc. So I'll try to give my opinion or kind of a clarity, sharing some clarity with you, which I am now having more confidently on these issues in Indian context. Then I'll speak about 4 very specific broad theme why Indian market looks very, very attractive for long-term investments. Along with that, I'll also give you 2 specific themes where we at Narnolia are very, very bullish upon, and we are gradually increasing our portfolio weightages in those themes. So I'll speak about 2 specific themes जहां मुझे लगता है investment की अच्छी opportunity है. And then I'll talk about the portfolio. You all know at IIFL platform, you have 2 advisory portfolio managed by Narnolia available for you to invest into. So in the latter half, I'll speak about those 2 portfolio, how they are doing, what is my conviction in terms of how much return from here on those portfolio will give. So that's the broader contour of my presentation, starting with the doubts and trying to clear those doubts of yours. Then giving you the broader 4 reasons why India looks a very attractive destination for equity investments, 2 specific themes, and then on our portfolio. So folks, just let me add my presentation deck. Allow me a second. Yeah, I hope this is visible all. So as I said, I'll start with clearing some of the doubt that people have on the market. You keep listening to a lot of bad press, in terms of inflation, interest rate, geopolitics. So I'll give you a couple of, at least what my own take on those issues are. I'll speak about those issues. But before we go there, just for a minute, I would like you to focus on a simple maths of Indian market. This is a very simplest possible math on Indian market, a truth, a kind of a universal fact, which Indian market has exhibited over many, many large years, many years. We had our Sensex starting 1978, 79, right? Since 1979 till say 2020 March, in 43 years, almost 43 years, market had gone up and up and up, right? But what is the annualized return from the market? 15%. So if you look at the, because Sensex is the oldest index, right? Nifty is quite new on the block. So looking at purely in terms of index return, over the last 43 years of its existence, Sensex has given you 15% CAGR, right? But the reality is, and today in the webinar also, I'll speak about doubts and economic region and themes which is going to work. But the reality is, if you don't do anything, if you just buy a good index or a good portfolio, and you all know, index is nothing but a portfolio, right? So like Nifty 50 is a combination of 50 stocks. Sensex is a combination of 30 stocks. They are portfolio, right? So if you own and hold a good index or a good portfolio, over a long period of time, you make 43% return. And those macro things, inflation, interest, because in the last 43 years, there had been wars, there had been very, very bigger economic imbalances, lot of inflationary trend, everything good and bad has happened in the last 43 years, right? But instead of focusing on the larger perspective, if somebody focuses on short-term issues, like how the market appears in the next 3 months, 6 months, and starts doing market timing, there is a stat which tells us that in these 43 years, because of market timing means entering the market, exiting the market, if you do, and you miss the best 43 days, in 43 years, if you miss the best 43 days only, your return falls from 15% to 7% only, 6.97%, right? So the reality is, we will keep debating, and I also will debate today about the market scenario, how the market kya lagta hai agle 2 saal, 3 saal, 1 saal ke andar mein. I will also speak about those issues. But the reality is, instead of focusing on those short-term issues, if you just own a good index or a good portfolio, like the one we offer at Narnolia, if you just buy them and hold them for long, many years, you get a decent enough return. Some of you might be thinking, 43 years is too long. Who invests for 43 years? So folks, even if you take just 20 years, since 2002, and you and I all know, we invest for more than 20 years in our investing history, right? So even if you take last 20 years, the CAGR of the market is 15% again, right? So you take 43 years, no 43, take only 20 years, still the CAGR is 15%. And there also, if you do market timing, your return falls. So folks, very simple fact to start with. This slide is telling you Indian equity, as part of the history is concerned, has given us, if we are a long-term investor and we ignore short-term noises and inflation and interest rate, etc., we are in a safe hand, and 15% is, among all the asset classes, is one of the highest return, right? In fact, highest return among all the asset classes. Particularly when the markets are down, in case the market is correcting, then our CAGR is even higher than 15%. Think about this. Say, for example, one of you or some of the investor who invested last year when the market was trading at, say, Nifty of 18,500. I am very confident, even that investor who invested last year in October, November at 18,000 plus level, in the 10-15 years, he will also make 15% CAGR. But fortunately, in a decline, if a decline is happening in the market and you buy in the decline, your CAGR will be higher than 15%. So folks, very simple thought in the beginning to start with, कि जितनी भी बातें करते हैं हम इकोनॉमी के बारे में, इकोनॉमी के प्लस माइनस के बारे में, बहुत सिंपल तरीका है कि हम कुछ भी ना करें, एक अच्छे इंडेक्स को या एक अच्छे पोर्टफोलियो में निवेश करें और लंबी अवधि तक उस पोर्टफोलियो या इंडेक्स में बने रहें. That's a safe and sure way of making Very good return from Indian equity as asset class, right? Now, let's get to the topic which I just initiated. You and I know in the last 2 years, 2.5 years, पिछले 2-2.5 सालों में पूरे विश्व के अंदर में बहुत सारे डिसरप्शन हुए हैं. There had been multiple disruption, right? Who will forget 2020? In the first half of 2020, you had COVID, and you had all the COVID-related lockdown, and because of those lockdown, GDP fell very, very sharply, right? GDP में बहुत तेज गिरावट आई थी. In our context itself, GDP fell by 25% after the COVID, right? If you remember. और GDP के अंदर में इतना बड़ा उछाल या गिरावट कभी नहीं होती है. 25% is a very big number for a GDP to handle. GDP अमूमन क्या होता है? 4% to 7%, right? It's never that volatile. But we had macro events, we had geopolitical events, we had COVID type situation where every asset class became very, very volatile, or something what is called black swan event. और black swan का मतलब छोटे अवधि का event, but काफी impactful event. And you all must have heard black swan. और पिछले 2-2.5 सालों में sequence of black swan हुए हैं. Supply chain की problem हो गई, commodity prices तेज हो गए, Russia Ukraine war हो गया, right? So we had gone through a series of disruption in the last 2.5 years. Folks, there are 4 financial markets. जब हम बात करते हैं वित्तीय बाजारों की, when we talk about financial markets, there are 4 specific financial markets. You have equity market, you have commodity market, you got bond market, fixed income market, you can call that way, and the currency market. There are 4 markets in the world, 4 financial markets in the world. And whenever disruption happens, these 4 financial markets becomes volatile, and they have to go through a process of reset. They have to get themselves reset, right? And you all know this happens. Anything happens, everything becomes volatile. Russia-Ukraine war happened, commodity went up, interest rate went up, currency fell, equity fell. So all these markets, all these 4 financial markets has to pass through a time period where a reset has to happen. This is the typical of financial market. Now, I will take all the 4 markets one by one and tell you where we are today, right? Let's take commodity market in the beginning. Commodity markets are like what? Agriculture market, all the wheat, soya bean, etc. You got base metal market, aluminum, copper, zinc, lead, etc. Precious metal and energy prices, crude, natural gas. The reality, folks, is whatever rally happened in the commodity prices has got completely corrected now. Look at one price, aluminum. So aluminum at the end of last year was trading at $2,200 per ton. In the month of April, post the Russia-Ukraine crisis and all the geopolitical uncertainty, it almost doubled, right? It went up to $4,000 per ton. But today it's back to where it was. Look at all the prices. Barring crude price, some energy basket price, all other commodity prices are back to where they had started. So folks, first thing to keep in mind is out of the 4 market, commodity market has got itself completely reset again. The reset of one of the market is over. So when we say we are living in a very problematic macro situation globally, geopolitics kharab hai, macro kharab hai, keep in mind, out of the 4 market, एक market completely reset हो चुका है. कहने का मतलब, the problem is behind us, not in front of us. You might be listening in press, there are problems, but what I'm saying today is, there were problems, but majority of the problems are behind us, not ahead of us. And this is a good news for us in equity market, right? Let's take another market, fixed income market. I'll take you India example. Friends, in front of your screen, what I'm showing is a 10-year bond yield chart. India's 10-year bond yield chart, right? Don't go by the complete chart. I'll not go in technicality. I'll try to keep it as simple so that we understand the meaning, right? Just focus on this area, 2017, 2020 in the middle, 2018, 19. Just focus on 2018, 19. I've already dotted here in a circle. I'm moving my mouse also. What you can see, the interest rate was inching up. From 2017 onward, interest rate went up and went up. Went up to what level? 8.2%. So in the last interest rate hardening cycle, in the last cycle where the interest rate were going up, it went up to a high of 8.2%. It traded for 8% for 3-4 months and then fell. Now, we are again today in a rate rising cycle. Means we are in a time period where the interest rates are going up. Now, in the previous rate rise cycle, in the previous cycle of rising rate, we had gone to a high of 8.2%. And remember in 2018-19, inflation was high and the corporate balance sheet were very, very bad. A lot of default happened at that point in time. ILNFS, DHFL, a lot of default happened. Today, folks, whatever we talk, the reality is the balance sheet of corporate India is far superior. So in a situation where, of course, interest rate is rising, inflation is rising, but the corporate balance sheet is good. In that scenario, the rise in interest rate in India should not go beyond 8%. It's a very simple law. I'm not giving you detailed economic rationale. I'm trying to make it a very simple thesis in your mind. That in the previous rate cycle, it went up to 8.2%. Today in India, the macro is superior, is better than 2018-19. In that case, why interest rate in India should go beyond 8%? Now, we already have come from 6% to 7.5. Today, we are at 7.46, 7.45. So in this rate rising cycle, India had to move from 6% to 8%. India was at 6%, 5.8, 5.85 in 2020. Rate rise cycle came of rising rates and rate rose. And something which had to go up from 6 to 8 has already reached 7.5. Now, what does this tell you? When we say we are at a rising interest rate environment, my thesis is very simple. Majority of the rate rise is behind us, not in front of us. Means it's a problem of the past now. अभी RBI की पॉलिसी आने वाली है 2 दिन के बाद 3 दिन के बाद. There will be a lot of noise around that. Right? There will be some rise in repo by the government, by the RBI. But the reality is, in terms of market rate, in terms of 10-year bond yield, which is the most, is a better measure of how the rates are moving in India. In that sense, ये जो पूरी rate की interest rate की rise की cycle है, उसका 3/4 हिस्सा हो चुका है. So overall rate cycle is 3/4 behind us. Just some small part is ahead of us. So again, what this tells you, that today we are talking about this problem, but the market had adjusted itself to this reality. These problems are fully factored into markets now. So folks, we spoke about 2 markets, commodity market, fully behind us to my mind. Bond market, some bit of a pain may be left for about 3 to 4 months, not more than that. And larger pain is over. Currency market, again, we will not go in technicality of what current account deficit is happening and what is happening. There will be some more depreciation to rupee. My own calculation is there will be some more depreciation to rupee. But have confidence, bit of a fall in rupee, say rupee going 80, 81 around or 81.5 around, will not damage the earning per share of Nifty. What matters the most for equity market? Let me say that again. My understanding today in terms of economy is that there will be some more decline into rupee. We might hit 81 or near around 81. But that will not change or that will not reduce the earning per share of Nifty. That means no impact on equity market of rupee depreciation in the shorter term. So we spoke about 3 markets. The 4th market now, which is more important for us in today's conversation, equity market. I'll come in a while. I'll just come in a while. Before going there, I want to share with you a couple of major reasons why India looks very, very attractive. World might be a problem space. Europe will be into recession maybe 3 months, 6 months down the line. There might be a kind of stagflation in USA, which is my initial reading of macroeconomies. But I'm very, very confident India is set for a very, very good days ahead, good years ahead. And as an investor, you and I need to be very, very convinced about those factors. Right now, our investments into Indian equity is really into safer hands. If we are genuinely a long-term buyer, more than 3-year, 4-year, 5-year kind of investor, we will get similar return, similar to what Nifty or Sensex has done in the last 10, 20 years. The kind of wealth creation India has seen over the last 20, 30 years, to my mind, will get repeated also in the next 5 years, 10 years. I'm very, very convinced about. And then let me share you a couple of logic on that. Let's take logic number one. Just look at the table in front of your screen. Folks, over the last 50 years, पिछले 50 सालों में, there is a classic alternating kind of a pattern. And what the pattern is, say between 1985 and 1993, between year 1985 and 1993, emerging market were up by 390%. So 1985 to 1993, emerging market gave 390% return from the stock market. At the same time, the American market, the developed market gave only 118%. So in this decade, emerging market gave phenomenally higher return. In the subsequent decade, between 1993 to 2002, emerging market was down for 8-9 years. In dollar terms, markets were down, while the developed market was up by 141%. But in the next decade, 2002-2010, emerging market came back very, very sharply, return of 314% versus merely 14% of developed market. What you saw, emerging market ने अच्छा किया एक decade में, दूसरे decade में developed market ने किया, तीसरे में वापस emerging ने अच्छा किया. And the last decade, 2010-2020, in dollar terms, emerging market is remaining flat, -2% over 10 years, while the developed market is up by more than 200%. What you are seeing on your screen, there is a classic alternating pattern. एक pattern है जो alternate करता है. In one decade, emerging does good. In the second, developed market do better. Then emerging does better. Then developed do better. In that sequence, statistically, I'm talking about the statistics here, 2020-2030 belongs to where emerging market will do far better than developed market. And today, whatever the problem we speak of is mostly of developed market, Euro and US. This classical statistical pattern tells me a conviction that emerging market अगले 10 सालों में बहुत अच्छा करेगा, and India is a part of emerging market, you and I know, right? Now, this is not only a statistical data, the underlying macro factor, ये आप कह सकते हैं कि ये number ऐसा हुआ है पहले तो आगे क्यों होगा? What is the rationale behind it happening in future also? Now, I look at a lot of data, GDP growth rate, forex reserve movement, interest rate movement, and based upon those reality, what I am seeing today is there is a very high chance of this pattern repeating. जैसे आप दिखा सकता हूं मैं छोटा सा, I'll take a minute on this, little technical in nature. I'll try to keep it simpler. 2002-2020, it belonged to emerging market. In the next decade, developed did better. If you see how the interest rates were moving, अगर आप ये देखें कि जब ये रिटर्न ऐसा दे रहा था बाजार, तो उस टाइम पे उन इकोनॉमी में how the interest rate was moving, you will find there is a correlation. जब भी इंटरेस्ट रेट जिस मार्केट का ज्यादा बेहतर मूव कर रहा था, वहां पे ये तेजी ज्यादा हो रही थी. और आज के समय में 2020 से 2030 में इंटरेस्ट रेट में तेजी चल रही है. 2020 से 2022 हम पहुंच चुके हैं. वी हैव ऑलरेडी रीच्ड 2022 फ्रॉम 2020. 2 साल हो गए ये डिकेड के. इन दीज 2 डिकेड interest rate has gone up, but think of it, interest rate has gone up more sharply in developed market. In America, the 10-year has gone up from 0.6 to almost 3.4 now. This is a bit of 2.9 is a bit of old data. So from 0.6, it has gone to 3 point something. Very sharp rally. At the same time, in the emerging market, the interest rate has moved from 6 to 7.3%. Much, much softer than what had kind of a return interest rate rally or hardening of interest rate has happened in the developed market. That tells you this is not only a statistical pattern. There are regions, there are fundamental macro variables. They also alternate. They also pass through this decade cyclical pattern. One decade emerging market patterns are good, interest rate is good, GDP growth is good, etc., etc. And this keep on alternating. So this return or this performance of a stock market is not by fluke. It's not by chance कि ये alternate करता है ऐसा. This is because of underlying strong rational economic reason why it happens so. So my point number 1, I spoke about worries, right? Now I'm speaking about the opportunity. So opportunity का पहला point जो मैं share करना चाह रहा था आपसे, वो ये purely from a statistical perspective and using the economic logic also, the chances कि ये पूरा decade, not only अगला 1 साल 2 साल, ये पूरा डिकेड इमर्जिंग मार्केट के लिए बहुत ही अच्छा रहने वाला है. दैट्स द पॉइंट नंबर 1. Point number two, you and I know for sure today, the world is becoming more and more digital. Every business transactions are happening in a digital mode. एक जमाना था where the GDP का मतलब होता था, किसी भी देश की GDP का मतलब होता था agriculture, trade and commerce till 16th, 17th century. Then the GDP became agriculture, trade, industry, right? 18th century, 17th and 19th century. In 20th century, services became very, very large. So now you calculate GDP as agriculture, industry and services. The way digital is growing, my own understanding, right now digital is a sub part of services, right? Right now you compute digital under services. But my own conviction is that in the next 10 years, in the world, whenever an economist will compute GDP kitna hai kis desh ka, they will have 4 different components to add: agriculture, industry, services, and digital. Folks, we have to remember when it comes to digital, India has a dominance in the world. India has a pure dominance in the world. This will bring prosperity to a lot of Indians and prosperity to our nation. I'll give you one logic. I'll not give you multiple logic, one simple logic. India in a year, in one calendar year, India produces 16,34,000 engineers, graduate engineers. India में हर एक साल 16 lakh plus produce होते हैं. जो बाकी के देश हैं, other nations who are into digital field, they are good in digital field, like China, like USA, Russia, Ireland, Israel. These are also good country in terms of digital workforce. If you add the number of engineering graduates that they produce, add them together, it doesn't come close to 16 lakh. And you know, in digital, what is the input? What is the raw material for a digital economy? Engineers, right? So, folk, this trend, this technological revolution which has happened across the world means that Indian prosperity will be continuously increasing, and the rub-off effect of that prosperity will be on pan-India economic basis, right? And this is a very structural trend. Doesn't matter ब्याज की दर क्या होती है, inflation क्या होगा, geopolitics किधर जाएगी. This digital trend will only improve and improve only, right? So this is a structural reason why India will get re-rated and re-rated on a continuous basis in a time to come. One more reason. So I gave you 2 reasons: a statistical pattern, emerging, developed, emerging, developed. I gave you digital as a basic backbone. Why this economy, why this India will get re-rated on a continuous basis. Thirdly, formalization, right? It's an established fact. Today in India, majority of the businesses are formalizing. Every industry you look at, things are formalizing, right? World over, whenever a formalization has happened, if you go back to early 20th century, when Switzerland was formalizing, the economy in Switzerland was formalizing, the stock market had done phenomenally well. Same happened for US, same happened for other nations. We are passing through a formalization period, and the logics are very simple. The larger organized players are part of the stock market. Larger organized player of an industry are part of the stock market. So whenever formalization is happening, means economy में वो जो segment जो listed है, वो ज़्यादा अच्छे करते हैं. Again, this is a trend irrespective of what happens to, you know, rupiah ka value and interest rate. This is not going to reverse, right? So I gave you 3 specific reasons till now. A pattern, a statistical pattern of international emerging. I gave you this region of digital as a backbone and a formalization on top of that. Now, this all will mean that India will remain an outperforming nation. I'll not go again in those numbers, but what I'm trying to picture you, what I'm trying to convey you folks is that there are underlying forces which is beyond the commodity fluctuation, interest rate fluctuation, RBI policy, very, very structural forces, which will mean that at least for this decade, India will be the outperforming nation for sure, in terms of economy, in terms of markets, both. Now, as I promised you, I'll speak about 2 themes, just 2 themes where we are seeing good opportunity, right? One is manufacturing into India. And I'll not talk about broader manufacturing part. I'll just stick to one simple thing. You must all have heard about the word production linked incentive scheme, PLI. You all must have heard. Government policy came a couple of years back. Now it's in full swing of implementation. And you will be amazed to know that every timeline which was there set for PLI in terms of, ordering, tendering, etc., allotment. Today, I am surprised as an Indian that this in the PLI, whatever was originally envisaged in terms of timeline, largely those timeline had been successfully executed by the government and the industry, right? As a big achievement. That gives me confidence that PLI will be a very successful scheme in days to come, right? And I do not have any doubt on that. Actually, the way it is rolling out, I'm very, very confident about it. Now, इसके अंदर में opportunity कहाँ पे है? Think about it. The PLI had been structured, the production linked incentive scheme had been structured to counter two things: reduce import, improve export. Reduce import, improve export, and specifically focus to reduce import from China. So today, friends, we are importing about 8 lakh crore of rupees of worth of goods from China. Rough figure is this import will come down to 4 lakh crore in few years to come as PLI becomes completely functional, production starts, which is now starting in FY23 itself. 24 it will be in full swing. 24, 25, 26, 27 PLI will be in a full swing. और तकरीबन 4 लाख करोड़ का हमारा जो इंपोर्ट है चाइना से वो घटेगा. आप लिस्ट देखेंगे तो आप समझ जाएंगे. टुडे आई एम जस्ट गिविंग यू ए ब्रीफ आइडिया अबाउट दैट. And there will be 2 lakh crore of further production for exports. So in total, annually there will be a manufacturing of 6 lakh crore additional in India, starting FY24. Some will come in FY23 itself, but FY24 में ये पूरा 6 लाख करोड़ का नंबर आएगा. 4 लाख करोड़ से हमारी इंपोर्ट घटेगी, 2 लाख करोड़ से हमारा एक्सपोर्ट बढ़ेगा. इसका एक बेसिक इंपैक्ट क्या आएगा कि हमारी करेंसी जो थोड़ी डिक्लाइन कर रही है आज डॉलर के मुकाबले, हम यूरो से बहुत एप्रिसिएटेड है पर डॉलर से गिरे हैं. अगले कैलेंडर ईयर से रुपया में स्ट्रेंथ शो करेगा. रुपये विल बी ए स्ट्रॉन्गर करेंसी इन द वर्ल्ड अलोंग विद यूएस डॉलर फ्रॉम नेक्स्ट ईयर. आई एम वेरी वेरी कॉन्फिडेंट. ये पीएलआई का एक बहुत बड़ा साइड बेनिफिट होने वाला है अपार्ट फ्रॉम मैन्युफैक्चरिंग जो होगी. फॉर स्टॉक मार्केट तकरीबन 99 डिफरेंट कंपनीज हैं. दीज आर द नेम ऑफ द कंपनी हु हैज गॉट पीएलआई में some allotment, and these are all listed company. 99 different company जो listed है इंडिया में आज, उन्हें PLI में allotment हुआ है. Naturally, the incremental delta or incremental change of manufacturing will favor them somewhat positively. And so this is a one sub theme which is very good for us investor to focus on. In our own portfolio, we are raising the weights of these company. Of course, you can't buy. You have to be very very selective at the stock risk level. Second theme which I want to share with you is like, look at the banks. पहले आज से 1 साल पहले तक जितने बैंक्स हैं इंडिया में, चाहे वो प्राइवेट हो या पब्लिक हो, उनका क्वार्टरली प्रॉफिट अगर ऐड करें आप, सारे बैंक, HDFC, SBI, ICICI, कैनरा, PNB, all banks together, the quarterly profit was just around 20,000 crores. Then it became negative because of NPA and all. We will not discuss on that. But today, the combined profit pool of all the banks, PSU and private together, on a quarterly run rate basis is close to 50,000 crore. आज से साल, 2 साल, 3 साल, 4 साल पहले तक सारे बैंकों का जो कंबाइंड प्रॉफिट आफ्टर टैक्स था वो 20,000, 25,000 करोड़ के रेंज के नीचे ही रहता था. टुडे द क्वार्टरली रन रेट ऑफ प्रॉफिट पूल ऑफ all the private and the public sector bank combined together is more than 50,000 crores. So that is the kind of underlying change which has happened because of NPA and other issue. Will not go in there. So I spoke about two opportunity. PLI manufacturing is an excellent opportunity to bet on, and our portfolio, which is there on the IFL platform, we have bought already some stocks from these two themes of PLI and the banking, and we will be continuously adding weights. So that's a short-term opportunity. So I spoke about 3 very large structural trends: alternating statistics, emerging developed, digitalization, formalization. I spoke about now 2 themes. Now themes are always short-term. Themes are not that, but those regions were structural. Now, in the end, I'll speak about 2 aspects of India. India, in terms of valuation multiples, are at an attractive level. हम कहते हैं ना, margin of safety चाहिए होती है. तो 2 एग्जाम्पल है. मार्केट कैप टू सेल्स का, जिसे बफेट इंडिकेटर कहा जाता है. Let's not go with that. Let's take a simpler one. Price earning ratio. We are all familiar with price earning ratio, right? In terms of price earning ratio, जब बाजार गिरा हुआ था, when the market was down last month, जबकि जून 15-17 के आसपास around 15th and 17th of June when Nifty was down, now we have rallied by 10% from the bottom, right? उस वक्त हमारा जो निफ्टी का जो प्राइस अर्निंग रेशियो था वो 15.5 टाइम FY24 था. Based upon 2024 financial year earning, based upon FY24 earning, Nifty was trading at 15.5 times. Now it is now 16.5, 17 because of a rally in the last 1 month. But think about this. पिछले 12-13 सालों में, in the last 12-13 years, Nifty has always traded in a range of say 17.5 to 23.5. Nifty का जो price earning ratio है वो पिछले 10-12 सालों में almost 18 to 24 के range में रहा है. Same Nifty at a last month price or even today are below that range, right? That means what is called margin of safety was available for us to invest into. Even now there is still some room left. So folks, not only in terms of the structural region, not only in terms of those themes which is booming, even in terms of margin of safety, market today are much attractively valued. So folks, the idea here is this calendar 2022 is a sowing year for you as an investor. For investor, this is a sowing year. Sowing means investing year. Use this calendar 2022 when there is some macro uncertainty, geopolitics, etc. Some sentiment thing will have keep hampering market here and there. But please use this year as the year of investment, right? Because if you do the year of investment, if you celebrate this year as a year of investment, and then you hold those your investment for next 2-3 years, I'm very confident you will get a very decent return. Not only for next 2-3 years, for next 8-10 years, 6-8 years, we are in a very safe hand as far as the Indian equity investment is concerned. Now, folks, I'll quickly go through some part of the two portfolio which is there on IIFL platform for you to participate into as an investment. Those two portfolio are managed by us at Narnolia Financial. This is a very, this company since 1997. We are managing, advisory portfolio since 2009. Our product has received numerous industry recognition. CRISIL, they now have entered into rating portfolio management services also. CRISIL is a big rating agency. For our performance, they gave us 4-star rating last year. And similar number of awards we have received, right? As I said, we are managing the advisory portfolio since 2009. Over the last 13 years, we have passed through many different markets: bull market, bear market, good macro market, bad macro market, inflation, all kinds of market we have gone through. All our portfolio has performed across the market cycle in a very decent sense. You can see on the screen. The two specific portfolio which is there available on the IIFL platform, NS 50/50 thematic portfolio and NS multi-cap portfolio. In this market cycle, when I said bull market started in 2020, since start of the bull market, this portfolio has given more than 100% return. And in that sense, I think these portfolio are among the top decile or top quartile of all the investment product available for you, whether you count a mutual fund or a PMS or advisory portfolio. Among all the investment portfolio available for investors to invest into, these two portfolio are among the top quartile, right? If you take a near-term performance, last 3-month performance, NS 50/50 has given an alpha of 1.3% positive alpha. NS multi-cap has given an alpha of 1.5%. So even don't take the full picture portfolio of since March 2020. Even in a near term, say this portfolio are doing good. We have a huge amount of conviction on these two portfolio, and I think that's a good opportunity for you all investors to invest your money into, and in case the opportunity India is throwing upon us, quickly on these two portfolio in a very short summary I'll cover. These are fundamental portfolio. We buy only good quality company in all our portfolio. We filter out those quality company where growth is small or growth is less. So we buy company which has a great quality and they are showing growth in the near term, and we got a valuation headroom to make some money. That's a very short summary of what we do. We keep on filtering out in India which are quality company. We look at those filtered or selected quality company where we see growth in the next 2-3 years. Then among those stocks where quality and growth both satisfied, we look where the risk reward ratio is good for us as an investor. So this is our simple philosophy, and all the stocks in the portfolio are based upon these kind of selection module. We are a fundamental bottom up investor. We do bottom up digging deep of fundamental this thing. We don't use price charts, or we don't use other things. We are purely a fundamental investor in our portfolio construct. My last slide for the presentation, which I want to share with you. There are, say for example, look at the multi-cap. I'll explain the multi-cap portfolio for you. In the multi-cap portfolio, we are owning this multi-cap portfolio, which I spoke of. It is multi-cap. In this portfolio, we are owning about 20 stocks right now. These 20 stocks, if you look at their business growth, EBITDA level growth, these 20 company weighted average growth is 21%. That means we have bought a portfolio where the stocks are good growth stocks. At the same time, the portfolio ROE is 17%, very decently high ROE. So good quality, high growth portfolio, right? Look at the FITI again, 22.5 is the ROE of the portfolio. 29% is a very high growth, high quality portfolio. And what our conviction based upon 2024 earning is that this portfolio will give you decent rate of return. Some rally has happened in the market, but from here on, what the market has given in the past that we saw in the first slide, 15% CAGR, our sense is this portfolio will be able to deliver more than 15% CAGR in the next 2 years, purely based upon what the earning estimate for portfolio companies are and what the valuation multiple we are assuming for those in the next 2 years. Thank you, folks. This is like what I would, what was my plan to speak to all of you, sharing my view on uncertainty and a lot of negativity which plays around in our mind, how we are looking at those factors. Some of the structural factors that we miss out in, day-to-day news and news flow happening, we miss out on the structural issue. Some themes which are evolving big time in India, and about the two portfolio, which is available today for all of you to invest on IIFL platform. So thank you very much.
Thank you, sir, for your wonderful insight. We have few questions coming up. We'll take the few questions on a faster note and let us understand. Any participants who wish to ask any of the questions, please write down your questions in the Q&A box. We'll take your questions one by one. We have one question. Can we get the PDF slide? Sure, we should be able to get the PDF slide.
Sure, we'll try to share that with you.
Yeah, please that do. Please, that would help our clients also to understand in much better way.
Sure.
We have a question from Mr. Datta. Whether mid cap and small cap will outperform the large cap? Sir, your view on the same?
Yeah. So, see, it depends upon what horizon you are looking at. So if somebody is actually investor for next 3 years, and if you are genuinely a 3-year investor and you don't get bothered by the short-term swings in the market, my own sense is in 3 years since the mid and small cap will outperform the large cap. I have a very clear conviction on that. Not because of, in the market rally, the beta will make the mid and small go higher. But primarily when I'm looking at various companies which they are available in mid and small cap, and there are a good number of stocks available, the way they have positioned their businesses, I mean, they passed through a very bad patch between 2017 and 2020. Mid and small cap companies had a very tough time during that period. But I think they have all learned a lesson. And when I listen to the management interview of majority of those mid and small cap companies, they are employing very good strategies. They all have made their balance sheet much, much cleaner than what they were before 2020. So in a very good space, their balance sheets are. The strategies by the management in the right place. And that will mean that these companies in the next 3 to 5 years surely will outperform the large cap in a relative basis. But yes, keep always in the mind, the destination large and mid will give you higher return, but the path will be more volatile than the large cap. And if you are invested in the market for more than 3-4 years, you understand mid and small cap investing comes with high volatility in our portfolio value. So keep that in mind, but purely from point to point basis, from now to the destination basis, surely large and mid will do better.
Thank you, sir. We have a couple of more questions. If there's a question from Mr. Srinivas, if we see 20% profit in 5x 5T, is it we can book profit or keep it as it is? So they want to
right.
reject the portfolio where you are already giving your inputs.
Right. So Srinivas, see, think about it like what portfolio we are managing are purely from investment perspective. We don't have a trading mindset. We are not buying or selling security for the next, thinking about next 3 months, 6 months. Whenever we buy or we sell any security, whenever we get doubtful about the next 2-3 year future of that company, right? So whenever we are buying a stock, we are buying for 3 years, 4 years. Of course, practically, sometimes some of the company thesis changes. I mean, if we bought today thinking of 2025 exit, but something changes in the macro dramatically, or some government policy comes differently, or maybe the management changes its strategy in the middle, then we have to exit from those company in the next 6 months or 1 year itself, right? So we also have to exit by in the shorter term sometime, but actually our intention is to buy and hold for the next 3-5 years for majority of our portfolio company, right? So this strategy of booking profit when they go 20% up, I mean, this is not a good practice. Buy and hold gives you better. One of our studies is that if you simply buy and hold for long many years, you make more than 15% CAGR in an index or a good portfolio. If you do market timing, you make less. There are a lot of studies which has happened and people have come out with those studies results. And we are in that camp that believes in buying and holding for long term.
Thank you, sir. We have a new question from Mr. Ashok. He is asking which sector is promising for next 5 years.
Vinita, you want to fill in?
Yeah, as sir just discussed that there are two sectors that we are liking as of now. One is banking. We are very positive on how the banking will perform because the banking was, struggling with lesser credit growth as well as higher GNPA. Also, if you look at the penetration of credit market in India compared to what developed nations are or other developing countries are, we are very, very underpenetrated. So keeping that in mind, banking for a long term from 3 to 5 years, banking should outperform other sectors. Another sector that we are liking is manufacturing, or you can say industrials, and because we are very optimistic on the PLI scheme that has been rolled on by the government, and it's the benefit of it will be many-fold. So it's a 5-year program wherein you will get, the government will incentivize the manufacturing industries, and that is on a incremental sales basis. So I think, not only for 3 to 5 years, but it's going to change the structure. The way India is going to import things from other countries, the way it is exporting, a lot of things will be changing. And there is, some 10 to 15% of PLI is already not booked as of now. Government has not rolled out all the schemes. So we'll be seeing more such schemes coming in future. So I think, keeping the backdrop of Make in India initiative by the government, etc., we are liking that industry a lot. So a lot of opportunities will be thrown in this sector also. I think 3 to 5, one major theme that we are liking, which is currently suffering in the short term, is the digital. So right now in the short term, very short term basis, there are margins which are compressing for IT companies. But, digital, not only IT companies, but all those companies who are making very good digital adoption and making things life easier for us as a retail or for any other companies or whatever, I think the digital theme is going to play big time because it's going to change the caricature of, there will be a lot of operating leverage. They just have fixed costs in the books, and there is huge room for upside in their profitability. So that theme, so these are the 3 themes that we are liking as of now.
Thanks, Vinita. We have seen from last 1 year, there is a continuous FII sale month on month and billions of dollars have moved out. How do you see this FII investment coming back to the developing nations, specifically India per se?
Yeah, I mean, this is a very pertinent question, I must say. FI has done a huge amount of outflow in the last, I think, almost 1.5 years now. very big number they have this thing. But look at the, before I come specifically to FII thing, I'm amazed at this big a large outflow by FII. Still our market fell just 15%, 17%, right? It's sell hua hai FII ka. But our market has not fallen. And that's a great understanding, Look at our domestic inflow which is happening in the market, right? You have some 12,000-13,000 crore of SIP money every month, and it's not falling at all, which almost 1.5 lakh crore of money is coming into equity in a structural way. And that money is not dependent upon market falling or sentiment good or sentiment bad, right? Apart from that, if you look at the NPS, National Pension Scheme, around 40,000 crore every year incremental money is coming in stock market from NPS, right? And then the people who are putting money in NPS don't think about the market, FII, anything at all. Look at the EPFO. Good part of money from EPFO also comes to its stock market. All the insurance company. So today, if I look at almost 2.75 lakh crore, almost 2.6, 2.7 lakh crore of domestic money is coming into Indian market in a structural sense. Means those money is not functional of Nifty kidhar hai, sentiment kidhar hai. They're just coming in the market. So today, FII is not that relevant. That the way they were very, very relevant to our markets till 2015-16, they were very, very important forces deciding the prices of Indian stock market. But now the scenario has changed. So that's a very good news, and you should not lose that reality in your mind, right? But yes, coming to the specific part of where the FII investment looks, I think structurally larger inflow will happen next year, March onward, which is I can give you a couple of reasons. Broadly, looking at the broader picture, I think FII, because of their own redemption pressure in the developed world, they are redeeming their things from emerging market per se. And India, as a part of emerging market basket, also has to get some shares sold, right? Because it's a overall kind of a redemption in the portfolio itself. So this happens in a regular basis. It's not that FII are selling India per se. They are selling emerging market, and India allocation also gets moved. In terms of emerging market flows coming back, of course, in the last 5-7 days, FII ne achhi buying kari. If you look at the last 7-8 days, FII has done buying, but to my understanding, structurally next year, March onward, FII will come back big time. Domestic money will not go away because SIP and EPFO and NPS will keep coming. Add FII money, that will make even the liquidity in favor of buyers in the market big time, right? So that's the picture on FII is concerned.
Thank you, sir. So what we understand in the layman language that once this FII money comes back, it could be cherry on the top where market can go further from here on. Since even though there is a huge amount of redemptions, but our domestic investments have taken over it completely.
Yes.
So, so it is a neutral effect in terms of getting the fund management kind of around.
Correct.
So basically, on personal front, I have two more questions for you, both of you. One is would like to understand on behalf of my all the audience, how is rupee's behavior will impact the market, because it is already on a urge of crossing 80 on the lower side. And the second thing is, how do you feel in terms of the digital companies which are moving, in terms of startups, in terms of the new age companies where the valuation played a drastic devastating role, where earlier the P's were so high and now it is course correction that has been happened in terms of all the new age startups. Right. So we have these two questions which would like to take it from you before we say thank you and move ahead.
Sure, Viral. So let's take the rupee wala part first. My own understanding is rupee going 81, and gradual depreciation which is happening is not going to impact companies earning in totality. So for us in equity market, what matters is how the earning per share of Nifty or Sensex changes, right? Rupee depreciation to 81 will not make any change to our earning estimates, right? So the impact on stock market with rupee going 81 will not happen. In fact, if you look at carefully, rupee has appreciated against euro, right? So we have depreciated against dollar, but we are almost 10% appreciation in the last 1 year against euro. In fact, that's a worry point. In fact, rupee going 81 will be more a welcomed step as far as the lot of companies are concerned in India, right? So 81 is a good thing. Maybe 1 rupee here and there can also move around. So that will be good for us, not in any way negative. Earning will not get impacted. Coming to the second question that you asked on digital new age startups kind of a scenario. See, I'll not, look at this way. These company and the type of valuation they commanded. In India, we took cue from what was happening in US. So in US, in the last 3, 4, 5 years, these startups were getting given very, very ridiculously high valuation multiple. So when this company came and listed in India, we did not have any understanding how to value them. So what everyone does is they just use a similar company in US, looked at their valuation multiple. So if something is trading at EV upon sales, enterprise value to sales of 10 times, they also bid the same stocks in India at 10 times, right? But now, as we know, in US, that burst is over. That bubble has got completely burst. Valuations have fallen dramatically. So from here on, what will happen? The normal sanity or normal valuation multiple, normal principle of valuing a company will come back, which is good for us as an investor, right? Of course, in the middle, some of us got burned our fingers a little bit here and there. Some more volatility will be there. But now the valuation will be more realistic, which is good for us in the longer run, right? Only bigger trackable is that I have seen a lot of digital new age company, new startup company. Their management takes very abrupt kind of a capital allocation decision. And that has to be very guarded on, because these managements, they don't have long-term pedigree per se. They have more excitement in the business, less monetary sense in the business. So whenever they do any capital misallocation, you have to be very, very careful about. But otherwise, this correction makes the area okay for the future.
Thank you, sir, for your wonderful insight. And we have taken a huge amount of time of yours and Vinita's to understand the market per se, updates on the Narnolia portfolios. So definitely our audience would like to take part in the journey, and we hope so. They like both our portfolios, which has given a tremendous returns of 100% plus returns in a shorter span of time. Also, traction should move your own, and we would be happy to have you back on our show once again, probably next month or so. So till then, on behalf of IFL, would like to thank you very much.
Thank you. Thanks, everyone. Thank you.
Thank you.
Thank you, everybody, for joining in. Thank you, Viral. Thank you, sir.
Thank you. Yeah.